Good morning, everyone, and Happy New Year from Easy Market. From me, Christian Delle Frate. We are here to start a new project of Market Brief. So I will deliver on a weekly basis, most probably 2 times per week, one market brief where we are going to check all the hot assets of the market, and we are going to analyze what is going on in the financial market. You know that now the situation after Trump election is becoming very volatile, and we are aiming with this project to try to give you a full clue of what is happening to help you to take the right decision during your trading activity. So once again, before to start, let me remind you our risk disclaimer. I will read you all our risk disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. So invest your money wisely, and let's jump immediately into the chart. So let me share my screen immediately because we have so many things to check today. And let me start immediately from Forex. So let me start immediately from Euro Dollar. Last time we saw each other, it was 1 year ago. Actually, it was 2024. I've been telling you that the situation on Euro Dollar and in the dollar in general, it's very tough. What does it mean? It means that the market in the last 2 months after Trump election is aiming to buy dollars. The dollar is the most hot asset at the moment in foreign exchange trade. Why this happening? I believe it's for 2 main reasons. The first reason is because the financial community believes that the interest rates in America will remain high, and we are not going to see any further cut in 2025, or at least we're going to see maximum 1 cut. So the demand for the dollar is very high because many investors prefer to invest in dollar bonds, so in United States bonds, T-bond. Second reason why the dollar is so strong at the moment is because the economy is running very well in America and is not running very well in other parts of the world, for example, in Europe. So once again, we know from the theory that when a country is running very good and the interest rates supposed to be very high, then the currency is sustained by many people that they are buying it. So what concerning Euro Dollar, we are now below the Trump level of 2017. So if I want to show you the chart to let you understand how bad we are in this situation for who is long or who is preferring to buy euro, and the situation on my idea can even continue for a few weeks, especially if Trump will continue to deliver message like we will put taxation, we will put duties on foreigner goods. So you know that all this commercial trade war that Trump is announcing can continue to sustain the dollar. Why? Because the reaction of the country that will be imposed taxation, for example, Europe, in order to avoid to get the full impact of these sanctions, they need to devaluate their currencies. Because once again, if, for example, Trump will put 10% import duty, import taxation on some European products, if the dollar will be 10% stronger, the impact of this taxation will be nothing for American people because they can buy more as the dollar is strong. So at the moment, all the country, we will see now Europe, we will see China, they are happy about this situation and their currency is losing value because in this way, the eventual sanction, the eventual taxation of Trump on the import will be absolutely nothing. This is something that is on the table, and this is something that, on my opinion, brought, for example, the euro dollar from 1.07 to 1.02 that is currently at the moment. So on a technical matter, on a technical view, let's try to see where is the possibility for euro dollar to arrive in the future days. And let me actually enlarge the graphic. So if you see, the only level we saw below 102 in the last 7 years was this 0.95 during the war between Ukraine and Russia in 2022. So at the moment, I believe the price can go close to the parity, close to 1.00. So my target at the moment for the euro dollar is this one. It's approximately the parity. We need to take in mind another fact. In 2016, 2017, when Trump was elected the first time, we saw the minimum of euro dollar 103.40 in the first week of January. So this minimum we saw last week, 102.27, is actually arrived in the same period like 8 years ago. From that time, in 2017, January, when Trump actually was starting his first mandate, it was like 20th of January 2017, the euro rose from 103 to 120 in a matter of 2 years. So many people think that after the Trump election, the euro will start to rise because Trump will not allow the dollar to be so strong. Because as I told you, the impact for the customs taxation will be nothing if the dollar continues to strengthen. So I don't know if it is going to happen once again, but in general, even though I believe there is still space to go further down, close to the parity, it's very difficult for me to short now euro dollar because we had such a big movement already. Then I would prefer to buy in case I see the price approaching the parity at 1, because I do expect a rebound after. So in general, at the moment, I'm sitting and I'm waiting to see if before the end of the month, and take in mind the 28th of January, 29th of January, we have the Federal Reserve meeting. If I'm going to see a minimum during these months, especially after the Fed meeting, I will try to do something like that. I will try to get a rebound of euro dollar. So if I see a price somewhere around here, 101, or approximate this level, I will try to buy this asset in order to see a rebound. Then if it's a rebound for 400, 500 pips, or even more, I don't know. I'm not aware. I'm not a magician. But in general, at the point, it's very difficult for me to short because we did already a movement of 1,000 pips, which is a huge movement. Okay, if we see during the war, actually 6 months before the war, we were 122, and then we arrived to 0.95. So this is not the first time that euro actually has such a strong movement. So we do have still space to go down. But in general, as 8 years ago in the past, after Trump election, the euro start to go up, I will try to get also this movement in this case. But once again, now it's too early on my opinion, because if in the end of the month, the Federal Reserve will confirm that they are not going to cut interest rate, or at least they will do only one, I believe there is still space to go near the parity. So this is the opinion I have on the dollar. And this is everywhere like this. I mean, not only in euro dollar. If we go, for example, dollar against China yuan, if you see, we have the same situation on a weekly basis. Look, we arrived to the top that we saw in 2023 September and 24 October 2022. So we are on this zone. And why? Look what happened in the last 2 months, 3 months. The dollar is very strong against the yuan, and actually the yuan lose around 6%. So at the moment, if Trump will come and will put 10% taxation on the goods imported from China, actually, the dollar is already 5% stronger than China. So 50% of this taxation has no impact, because in the last 3 months, dollar has more power than China, 5% or even more. So on these currencies, on this forex exchange currency, China, it's very important to see how the price will react on this top, on 7.37. If we go above this level, it's something we do not see for a long time, okay? So it means that most probably if we will have a breakout, we will see euro dollar at the parity, we will see GBP USD aiming even for below level than the currency, maybe USD JPY above 160. So we need to take in mind that at the moment, the dollar arrived to many area which are support, or in this case resistance. I will show you also USD JPY, because USD JPY, guys, we are again aiming for 160. If you see, there is a difference between euro dollar and USD JPY, because the euro dollar already arrived to the minimum of the last years. USD JPY, it's close to this top that was realized on July. You remember, guys, here at 160, the central bank in Japan intervened and start to buy massively yen and selling their dollar reserve. And we had this movement, which was very beautiful and very strong, from 161 to 140. So now we need to see. I believe we are going to see again 160. And from that point, I will personally short USD JPY. Because I believe once again, the investor and maybe the central bank will intervene. And I do believe also that the Japanese central bank will rise the interest rate very soon. So same for euro dollar. If I will see 101 or even below, I will try to go long. If here I will see 160, most probably I will try to short this pair, aiming for at least the level 152 in the next 60 days. So as you see, the dollar is very strong. The dollar approach some very sensitive level. So at the moment, I believe we should just wait. And all the position, I believe, I will put between the Trump starting of the mandate, 20th of January, and the end of the month after the Federal Reserve meeting. So this is the situation actually about the dollar. Hi, Tabish. I will do this session twice per week. For the moment, is like that. Then we will see. So let's jump now into stocks. So into the indexes. And I want to start with Standard & Poor's 500. So the Standard & Poor's 500, this is on a weekly basis. There is nothing to comment. This is a huge 5 waves, actually 3 waves I can see. So I want to show you this, this weekly chart. Why? For who loves Elliott theory, I see something like that, guys. I don't know if there is someone who is following the Gann theory, but I believe we are in this situation at the moment. Okay, let me draw for you. Wave 1, wave 2, wave 3. I believe this is one wave, and I believe we should see something like that. I still believe we can see something like that. Before, of course, to go somewhere here in the future. Why I'm telling you this? Because I believe we will see anyways a correction in the market on the Standard & Poor's. The correction is actually already started, because now, okay, this is the idea I have for the, let's say, the correction, okay? But if I go to the daily chart, I want to show you what is the situation at the moment. So the situation at the moment on the Standard & Poor's is trading 3.5% below the top that we had on 7th of December. So we are already in slightly negative territory, because we don't go above the top already 1 month, and we are 3.5% below. So I still believe we can see some trading range until the Federal Reserve. But if I will see any rebound of these indexes before the end of the month, anyways after the Federal Reserve, I will going short on this Standard & Poor, because I believe February and March we will see a correction. We will see a correction that can be 5 to 10%. So let's assume that end of the month I see somewhere the Standard & Poor around 5,900, 6,000. I will try to short this index until 5,700. So I will try to take at least 5 to 7% from the top I see in January. I don't know if this top is already done with this 6,000 that we saw 7th of January. I don't believe so. I believe now it's going to be, there is a chance for the Standard & Poor to rebound after Trump, that we start his mandate, maybe a bit of euphoria after this 20th of January. But in general, once again, if I will see another spike up somewhere around here, then in February, I will be short on this asset. I want to tell you one thing. Usually, January, guys, it's a very important month for the stocks, because what we see in January is the reflection of the full year. So, usually, a very positive January, it gives us an idea of a very positive year. So, if in January, the performance of the Standard & Poor will be, let's say, 3% from the opening, 2, 3, 4%, this will give us an idea of very strong year like the previous one. If instead the performance will be slightly positive, like from 0 to 1%, we can imagine a year that is going to be positive as well, but not so positive, not so strong like last year. In the other side, if we see a negative or very negative month in January, this is historically not good for the stocks. It means that there is a big probability, a big chance that the 2025 is not going to be a positive year, or at least it's not going to be a double-digit positive year. So we need to check out what is going on in January. That's why I don't believe that the market will go down now. I believe that January more or less will close. Let's check where January opened. The opening bell of January, it's this one. It's 5,900. So I believe January will close slightly above 5,900, because I believe this is going to be a positive year for the stocks, but with less than expected results. So I believe in around 8 to 10% performance this year. I don't believe on 20, on 25. So this will be confirmed if I see a January slightly positive, like 0.5, 1%. For the moment, we see huge volatility in the market, which is the same things we experienced in 2017. This is because of Trump. Because Trump likes to do tweet, likes to deliver news on the social network. So anytime we see a spike, most probably it's because of a news. Each time we see the price drop very fast, it's because of a news. That's what is doing Trump all the time. That's what's happened in 2017 and 2018, when the market was slightly positive but very, very volatile. This is a paradise for the trader, guys, because a trader likes to see trading range with a lot of volatility, so that you can do many operations and you can do money. Okay, so all the financial community is exciting about Trump, because if he will continue to deliver such tweet, such news during the day, the market is going to be very much volatile. And the volatility, it's a big plus for the trader, because the trader makes money when the market moves. If the market's stuck, the trader doesn't do money. So once again, I believe we are going to see a positive January on the Standard & Poor, slightly positive January. But then from February, I will point down this index, because I believe in a retracement in February and March. Let's go now to see. Let's now go to see Nasdaq. Same story for Nasdaq, that is trading now around 4.3%, no, actually more, sorry, 5% less than the top. Same story for Nasdaq. Nasdaq opening bell was 21,100, and now we are actually trading on the same level of the opening bell. I believe we can see before the end of the month some rebound to 21.5, maybe something like that. But once again, for what concerning the Nasdaq, I believe February and March we are gonna test this trend line. So most probably the area between 19,500 to 20,000. So what I would like to see, rebound on the end of the months, maybe 21.4, 21.5, and then I will go short from February and March, aiming to see touching of this trend line. This is the idea I have in all the indexes. In America, same story. I want to check also the Dow. Okay, let me clean. The idea is the same, guys, on all the American indexes. So there is nothing new to say. Down is the one that looks like more weak on me. But in general, if we see what's going on in the Dow, also here we are trading around 5% less than the top. This is a weekly chart. So if I take a daily chart, we will see better the situation. So as you see, we are already in correction territory because we are less than 5% from the top. Same story. I would like to see here we open at 14,900, so we are in minus at the moment. I would like to see maybe 1%, so something around here, maybe 43.5 before the end of the month, and then once again I will aim for a level which is somewhere here. I will show you. Also here I expect around 8 to 10% correction. It's gonna be nice to see something like that. So a test of this trend line in March. So somewhere here, maybe 41,100, 41,500. This is gonna be something like that. So what I expect is something like this. Here you are, guys. This is what I expect. So I want to see slightly positive January, very slight positive, and then correction February and March. This is something I expect in the stocks. Let's go now in Europe. So I want to show you the DAX, which is one of my, let's say, beloved index. Okay, let me take the chart. So there is already a difference with the US. US index are trading usually from 3.5 to 6% below the top. Here is not like that. We are close to the top. Top was realized here. So at the moment, DAX is trading 1.3% below the top, not 5.44 like, for example, Dow Jones or like Nasdaq. Why this happened? Why the Europe is stronger than US in the last period? First of all, because before it was not stronger. So summer and fall 2024, the DAX was less strong. But after 16th of January, 16th of December, 6th of December, yes, here, we start to see this huge movement of DAX that was stronger than the Standard & Poor's. Then we saw retracement, and now we are close to the top. So actually, the DAX is in delay comparing with the American stock. So what I expect in DAX, I expect to close the performance of the DAX since the beginning of the year. It's huge because we open at 19 900. So we are at the moment 2% above the opening bell. While America, it's exactly at the same level, or even the Dow Jones is below. So the DAX has at the moment around 2 to 3% extra performance since the beginning of the year. So what I expect the DAX to remain slightly positive in January, so to close maybe somewhere around 20,000, 20,100, 20,200. And then I expect also for DAX a movement of retracement. So slightly positive months, but here I don't expect to go further up. I expect to do a trading range in this area from 20 to 200, 2100, somewhere here. But then what I expect, it's a drop of 7 to 8%, 7 to 10%. So actually, I expect to visit once again the 19 area, let's say 19 area, something like that. So this is the movement I expect at the moment. Something like that. So here we anticipate American market. I mean, we are following the America, but in this moment we are above the performance in January than America. So I expect from now to end of the month to be sideline somewhere here. I expect the top, like usually, to be somewhere from Trump starting 20 and the Federal Reserve. So something like this. Okay, let's say like this. And then I expect February and March negative to go to close, let's say, this figure and strong support between 19 to 18,800. So this is what I believe we can see. This is the zone where we can arrive, 19 or 18,800 here. And then, of course, it's a buy on the dip. So same story also for the indexes. Let's go now to commodities, guys. Okay, Ezali. Yes, look, in general, for the European market, I already started to do a few short yesterday. Because the American market did this move, the European market did this movement that I believe also the Standard & Poor's will do in the next week before the end of the month. So for the Europe, absolutely yes. I already started at 2,400. And if I will see any other top before the end of the month, I will continue to go short. For the America, I'm waiting. For the America, no. I will be waiting the euphoria that usually appear after the real start of mandate of Trump. So yeah, you are correct. In EU equity, I start already to short. That's why I was drafting the graphs, and I would say, okay, we already arrived to the B point, and it's time already to go short. This is, of course, my opinion, guys, and then everybody has his own opinion. So let's continue now with the gold. Guys, gold is... the chart is very clear on my opinion. This sounds to me like a bullish flag. Bullish flag, it means that we have a strong trend up that we can see in the weekly chart. Okay. Then we saw retracement of, I believe it was like 9% or something like this, exactly 9.32. And then we are starting to go sideways, but usually this flag, it's a bullish flag. So we actually had a bullish trend, retracement, and now if we break stronger above this level of 2,721, we should go to the new top. You know that we were telling many times with Darius, I mean, 2,550, I start to build my position. I was hoping to see even 2,450, but I didn't see. So I'm already long, I'm already bullish on the gold, and I believe we can see 3,000 this year. So it's going to be a very good position because it's going to be 18% profit if this happened for me, because I entered 2,550. So let's see. Let's wait for this breakout. What can happen that I change idea? The only way why, on my opinion, the gold can drop very strong is if we see a huge drop on stocks, which is not on the table, in my opinion, at the moment. Something like what happened in 2022 or 2020 during COVID, because usually when there is a huge drop in stocks, people who has, or investment fund who has gold, used to close the gold position to protect their stock position. If this is not going to happen, and we see the retracement like 7, 8, 10% in the stocks, then I believe the gold will anyways continue to go up, will break this flag, and will go to 3,000 during this year. Not much to say. So the signal is it's validated when we go actually above 2,720. Let's go to oil, which is very interesting in my opinion, because we start to see some rise in gold in oil, but we arrived once again to a very important resistance point. So first of all, we broke this descendant let's say, I don't know how to actually say in the good way. So this descendant top line that connect the top that we saw on July and October. So we are now in the positive side of the line, but you see that we cannot go above 75, which is very important level. So here the situation is neutral until we see a strong break above 75, or if we see again to go below 70, I can say 71. Because if we go again below 71, we can continue this downtrend and we can aim again for 67. Instead, if we go above 75, 77 and 80 is the target. Why the oil is going up again? I can say for political tension, for a strong demand in America, because Trump is a big fan of old style commodities, so like oil, copper, gas. Is not a green guy. So in general, after the election of Trump, here we saw a trend that is going up. In my opinion, I don't think we are gonna see price go above 75. Maybe we go sideline now from 75 to 69, 70. Then we need to see what's going on in China. If China, that at the moment is very weak, on my opinion, they are not delivering very good number. If China will continue to be weak, I don't think we're going to see oil above 75. If instead the China will start again to rise in economy projection with a lot of incentivization, a lot of liquidity from the government, then we can see oil price to go somewhere around 80. For now, I think the oil will be much close to 70 or even below 70 than close to 80. This is, of course, my opinion. So, last but not least, we go to our beloved Bitcoin. So, guys, Bitcoin, very clear figure. In my point of view, Bitcoin had a top, which is now time to retrace. And I see this figure very clear. This is something I believe will happen. I'm a short now in Bitcoin since 100. This was very simple for me because it's Fibonacci is telling me what to do. I will show you now what was my thoughts about this. So once I believe that this is going to be, I had this level 107. So why I calculate this level? First of all, because here it was full of resistance in the 100.02. So I said, okay, I will enter 100.01. Stop loss, of course, above the top, 107. Take profit, 87,800. Fibonacci told me also this level, because if I see something like that, it was a 61, which is very probable to see when we are talking about Bitcoin. 100.01,600. So this was the level I entered on the 6-1 retracement of Fibonacci. What I need to go to a target, we need to confirmation of going below 91, which is the minimum of the 30th of December. Once again, several targets at the moment, because we are not magicians. First target is the the base of the cloud Ichimoku that I'm using a lot, 87,700. Then we have the second level, that is this candle, this minimum of the 12 November, 85,100. Then the last but not least are those two levels, 80, which is actually the Trump trade, okay, and 75. What I'm telling you that we go to 75? No. I'm telling that if Bitcoin wants to retrace, in my opinion, 87 is absolutely on the table. The other one are something we can see if we start to see panic sell. And once again, I want to focus also on the magnitude, how strong should be this movement. Look, if we see 87, this is 19%. It's the typical retracement of Bitcoin during the bull run. The typical retracement of Bitcoin during the bull run is from 20 to 25%. So 18 is absolutely normal. If we go to 85, it's 21%. It's absolutely normal. If we go to 80, it's 26%. If we go to 75, it's 30%. All this movement is something that, on my opinion, can happen in Bitcoin, especially the first two. The first two is something I believe because we always see. The 75 is going to be a present because here, of course, I will massively enter in Bitcoin because I believe we are going to see for this year 150. So let's assume the last level I have 75. If we go below, we see that, look here, retracement during the bull run, 27, 25, 22, 21, 21. So this kind of retracement, especially, I told you, 21, 23, 25, it's absolutely normal for Bitcoin during the bull run. And I should have also something longer. Let me check if it's... no, this is not long enough. Anyways, I'm telling you, if you go below, you will see that during the bull run, Bitcoin experienced always from minus 20 to minus 25, and sometimes even minus 30. So we need to understand that we can go simply to 75 and we are still in a bull run. Me, personally, I believe on these two levels, 88 and 85. So personally, I'm not waiting to go below this level. 87 and 88, I will put my first position. And then I will enter again only if I see this zone, 76, 75. Okay? But in general, the normal level of retracement are these two, 20, 22%, so 87, 85. This is what I believe we will see now in Bitcoin. But in order to go here, we need to go fast below 91 and with volumes. So, but you know that Bitcoin usually is doing these things in 1 week. So we have 3 days. I can see maybe this level if we are lucky during the weekend or next week. This is what I believe. So it doesn't mean that the trend is finished. This is a normal retracement that we always see during the bull run. So I believe we cover most of the hot asset at the moment. I thank you a lot to participate and for your question, Yetzal and Tabish. I give you appointment for next Tuesday. So we are running now this market brief twice per week, Tuesday and Thursday. But stay tuned because if we're gonna change something, of course you will know. You will know in our channel, in our Easy Market channel, YouTube. Subscribe, activate the bell, so each time we have a new session, new webinar, you will be informed. Thank you, guys. Have a nice day and have a good trade, everybody. And remember that today the American stocks are closed because we had a former president that passed away. So maybe the volatile today will be less during the American market time. Thank you, guys. Have a nice day. Bye-bye.